What's good, everybody? Happy Thursday! The month of March. We're already here. I couldn't believe it. I had 3 things I had to do on March 1st, and I totally forgot it was March 1st. But anyways, I hope you didn't forget. Happy March 1st. Not for the markets. The markets were lower today because of President Trump. Unfortunate, but we'll get to that in a second. A little bit of housekeeping reminder: if you're a client of Jazz Wealth, we remind everybody in February's to check your beneficiaries. If you have IRAs, Roth IRA accounts with us, make sure that you have the beneficiaries that you want selected. If you have no beneficiaries, take a moment, put it down there. It doesn't take that much time. If something bad happens to you, it's nice to know that that account's going to go somewhere. But also, it's that time of year to check and make sure you still want that account to go to that person. Hopefully you still like them. If you have an individual or taxable account with us, make sure we have a transfer on death certificate. It's the kind of thing that comes up. I have to deal with this all the time, and it's so sad when they don't prepare that and then the money kind of gets put in through the process, and I hate that. So be sure to check your beneficiaries. Also, if you're watching on YouTube, 10,000 subscribers. I mean, I was like pacing around my house last night going, I can't believe 10,000 people have subscribed to this channel. Unbelievable. Thank you so much. I appreciate it. I'm going to post a picture on social here in just a little bit. Awesome. If you are if you're listening to our podcast, I'll try to post this clip tonight. On our podcast, we do a segment called Sad But True. I read off 2 stories to my little brother. One of them is about a public company and is completely false. The other one is also about a public company or a CEO or something that may have happened, and it's unbelievably sad and ridiculous, but it's true, and he has to try to guess which one is the sad but true. So tune into our podcast for that. You can find it on iTunes, I believe, as of today, but I always try to post a little video on YouTube if I get a moment. Okay, that's that. Let's go over to the markets today. The stock market sold off today. It didn't start that way, but the stock market sold off all because of President Trump. Tariffs. He announced tariffs, 25% on steel, was it? Yeah, 25% on foreign steel, 10% on aluminum. The concern wasn't necessarily about the steel. And I gotta say, this is, you know, President Obama, remember when he first got started, it was kind of hard to picture him as a leader. It took him a little bit to get his feet wet. You know, I mean, it's a tough job, and it took a little practice. But by the end of his term, man, he was good, right? When he said we were going to do something, he really instilled confidence. He did a great job. Whether you're a Democrat or Republican, you got to admit, the guy really figured it out. Now, President Trump, he's a leader, right? That's his whole platform. And, you know, I think he's done some good things, and some things you kind of wish he would say differently, of course. But the idea today was the way he went about doing these tariffs was sort of last minute, and it seemed like he just got frustrated and said, we're doing tariffs. That's it. Because they were going back and forth. The beginning of the day, there was going to be no announcement. By the end of the day, that had changed. Now, nothing's official yet. They will got to sign off on this next week, but he basically said, it's a done deal. I'm going to sign off on it. I'd be shocked if he changes his mind. That would not be like him. So the concern here was not so much the tariffs on steel and whether the prices would go up on a can of soda or something. You're going to see that on all the news media tonight, how Pepsi and Coke is now all of a sudden going to cost you more. Sorry about that. Hit the wrong button. So that's not the case at all. Big deal. Go back in history. You can study the last time this happened. Not much of an impact at all. I think it doesn't even really matter. The question you have to ask yourself is, the Dow was down 431 points today. S&P lost 37. The Nasdaq 100 was down 92. Anytime the stock market falls aggressively, you have to ask yourself, as a retirement investor, someone that's in for the long term, is this a reason to run for the hills? Will this take down the market? Quick look at financial media. You can see what the reason is that the market's falling. You got to ask yourself, is this like a big financial crisis? Is this a big economic crisis? No, absolutely not. This will not take the markets down into the next Great Recession. This is sort of like a one-day, wow, I can't believe the president did that last minute, and sort of like seemed like he didn't even care what the decision was. This will all go away. So what does that tell you? If the stock market's falling and we can sort of at least somewhat ascertain that this is not the next great meltdown, doesn't that tell you that this is a discount, right? We're actually going to do a great video. It goes up tomorrow. Fridays are going to be Fun Friday videos, I've decided. And basically that video is going to talk about what happens if you add smaller contributions, specifically for each week, or if you do them once a month. We're going to break that down for you, so be sure to check it out tomorrow. Should be up around 1 o'clock Eastern time. Let's go ahead and take a look at some of the stocks on the day here, because one of the things that came out early this morning was unemployment. And you know, I don't get into this boring economic stuff too much. I mean, I'm interested, but I know you guys probably aren't interested in it as much. If you are, let me know in the comments if, you know, unemployment, manufacturing numbers, new home sales, existing home sales, CPI, PPI, if any of that stuff is interesting to you, I'll include it. I look at it myself, but you know, it's kind of boring. Anyways, unemployment, lowest level in 50 years, almost 50 years, 49 to be exact. Basically, the number of people that have jobs is the best it's ever been. The Federal Reserve says that the U.S. economy is essentially at full employment, unemployment rate at 4.1%. The only negative in that, if you really looked at those numbers, the only negative was the difference in the people that collected unemployment last week versus collected it this week actually went up. So that number actually increased. And that just says that really from one week to the other, people did not find a job. They're still collecting unemployment benefits. My thought on that is if you're unemployed and you're getting the benefits, you're like not in really any super hurry, right? You don't mind a 2-week, you know, vacation essentially to get paid unemployment. You paid into it. Why not get the money back, right? So that was some of the positive news. But then the tariff news took the stock market down today. Let's go take a look. Here is your S&P on the screen there. You can see nice little move from the lows. Very nice. It's since pulled back. I still think we're setting up a large range in here that we don't just collapse and fall to new lows. I think this is going to be some wiggling back and forth. One day bad news doesn't really much matter. The Nasdaq down on the day as well. Here's the Dow if you like to follow that. They basically look the same. The Nasdaq is still your leader. Unbelievably strong tech stocks. Really the secondary story today for me was retail stocks. So the retail sector kind of got hit hard. Some of the retail names, we've been talking about this all week. Whatever the, you know, the Federal Reserve chairman, now the tariff thing, the underlying sort of tide in the market is the retail sector. Let's talk about Limited Brands first of all. Limited Brands was one of my picks for Stock Madness there that we're doing in our podcast. I played it because I thought if earnings were good, then maybe it could beat my other pick. Earnings were bad. It is not going to beat my other pick in Stock Madness, so I already know which name is going to be moving on in the next round. If that sounds a little foreign to you, check us out. Check our podcast out. But hey, look, the stock was down 13% today. You see it on the screen. Pretty strong sell-off. You know, the earnings, like if you follow companies' earnings, not bad, right? Earnings per share came in above expectations. Revenue came out in above expectations. Profit better than expected. All of this stems from the company saying, going forward, we expect less profits. That's all it was. So everything else was good. Investors just said, uh-oh, maybe the good times are done. Profit's not going to be as good next quarter. Company said, yeah, we don't think it's going to be all that good. Stock falls. Kohl's, let's talk about that one. Do you have any exposure to Kohl's? Now, Kohl's was the same thing. Kohl's beat on earnings, had good sales, good profit margins. And an interesting story, if you're following along with Kohl's, these guys are going to probably be heroes in the future. Now, this is a Hail Mary throw for Kohl's. Their stores are too big. They can't make any money with the stores the size they are. They can't move to any other stores because they have all these other big stores. So their thought was, let's take all the merchandise and squeeze it in to the center of the store, thus leaving a big white area all around the outside of the store. And the one by our house actually has this. So when you walk in, you can see everything right there, but then you see all this empty space. It's as if they were closing down the store. It doesn't look bad, but it's as if they were closing the store. Well, Kohl's a while back said, you know what? We want to be more like Target and Walmart, but we can't really afford to be like Target and Walmart. We don't have the money to expand into that those sort of parallels there. So, or not parallels, those other divisions, food and things like that. So they said, rather than try to raise a bunch of money when we're not really doing that well, let's go to other grocers, convenience stores, and let's see if they're willing to rent the space, that white space that we have. Well, today they announced Aldi. Aldi would be one of their first test runs in 20 stores. What you're going to do is you're going to walk into Kohl's, you're going to buy clothes right in the middle, but if you go around the outside, you're going to see Aldi. So kind of interesting. It's sort of a Hail Mary play because they're really struggling. But I think it's brilliant. They didn't just give up. They didn't just say, that's it. We can't compete with Walmart or Amazon or whatever. And they said they have a whole list of people that are interested in being sort of partners with them in this mix. So I think Kohl's should have been up today. Might have struggled a little bit because the rest of retail got hit along with the stock market. So we'll see how that does going forward. Best Buy was able to hang on to a gain of 4%. They reported earnings today. Nice job here, Best Buy. If you remember, or if you pay attention to this, boy, they got to compete with Amazon, right? So what happened when Walmart came out with their earnings? Nobody cared about Walmart's earnings. They cared about the online sales. What money did they make online? Because that's an indication of how they're competing with Amazon. So what happened? Best Buy reports earnings and they kind of, oh yeah, we did good. We made this much, whatever. Oh, hey, we're going to raise our dividend to 45 cents from 30. It's got to be here somewhere, 34 or 37 cents. So they raised their dividend, their quarterly dividend. But the focus was on online sales. The company came out with their earnings and they said, you know what, blah, 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 all that stuff's good. Our online sales are up almost 20% from a year ago. And now that accounts for about 20% of our total revenue. That's an increase. That's starting to look better. Investors love that. They like the idea that, hey, look, they're competing with Amazon. That means that they can play the game. In addition, they will match any Amazon prices that you can find. So a quick look at the stock there. It's almost back to highs. While the market's sort of panicking a little bit and selling off and everybody's focused over there, Best Buy's pushing higher. Not too bad there. So that's all I got for you here today. The stock market taking a bit of a hit. The key thing you want to keep in mind is this a reason to panic, run for the hills, or salivate at the possibility of a discount, or what you are getting is currently a discount. That's all I have for you. What else? You got Nordstrom's coming out. Nordstrom's is actually down on earnings as of right now, down 4% on earnings. Any other names? That's not good for Nordstrom's, by the way. They're trying to go public. They're trying to convince some people to give them some money, and if they didn't do good on earnings, that's going to be hard to convince people to give you money on earnings. With no earnings. Let me see what else we got. If you're still with me, hang in there. Looking. Yep, that's it. That's all I have for you today. I hope you have enjoyed. More earnings are actually coming out by the second. I don't recognize any of them as being headliners though. So we'll keep an eye on things here. If you're interested in anything retirement, you need help with your retirement investments, and you want someone to help you keep your dough straight, follow along with you, work you through any financial questions that you have, that's what we're building here at Jazz Wealth. Also, I'd like to let you know, clients, new pricing coming out. We're able to lower our prices. I started this business saying I wanted to be someone that could lower their prices as they grew, not raise their prices. Every other business on the planet raises the money. Remember when you used to pay a quarter for a can of soda? Company got bigger, they charge more money. I want to do it the other way. So we're building that out now. We got to get it approved by compliance, but we're going to have new pricing tiers. So as you grow, we don't grow, right? We get paid less. I think that's fair. I think that's the way to go. So heads up for that. I'm going to keep reminding you, and we'll get everybody changed over as soon as that's approved. That's all I got. Enjoy the rest of your day, guys. I hope you enjoy. Leave me a comment. Let me know what you think. Adios.